and I'm a product manager at Fintel. Today I'm going to talk to you about insider trading and some SEC rules and what it is, and I'm going to talk to you about what insiders are according to the SEC. And then I'm going to highlight some things, some features that Fintel has that can help you understand insider trading a little bit better, and perhaps do some due diligence and understand what happens when an insider makes a trade in a company that you're following, and helps you understand if this is a bad thing or a good thing or not. So first of all, let's talk about what an insider trade is. An insider trade is when somebody makes a trade based on material, non-public information. And so there's a lot of fuzz around that. And let me tell you how I understand this to mean. You don't have to be a company officer to be an insider. You could be somebody else somewhere with somehow has access to material, non-public information. What that means is that material, there's a test that says, is this significant enough to affect the stock price, or is it just a fuzzy hunch? And is it material? Is it non-public or not? So has it been published or not? So what does that mean? So there's some examples of insider trades that have been pursued by the SEC, and one of the most interesting ones that I've found is a situation where there was an employee that worked at a printing company who had a law firm as a client, and this law firm handled mergers and acquisitions. And this employee at this printing company could see documents being printed by the law firm and get an advance notice of upcoming mergers that should have been private. And he traded on that information, and he was convicted, and I believe he was sent to jail. So here's a situation where you have somebody who is not related to the company whatsoever, either company whatsoever, but has access to material, non-public information, and he traded on it, and it was considered to be an insider trading. Now, that's kind of what an insider trading definition is. There's another kind of term, another use of the term insiders that's a little bit different, but is sometimes conflated with the kind of first term that we talked about. According to the SEC, an insider, and I'm using air quotes around this term insider, is any officer, director, or 10% holder of a publicly traded corporation. So what does that mean? So obviously, the CEO and the VPs of a publicly traded company are going to have a lot of information about what the future of that company might look like, as well as the board of directors. So if you're on the board, you might have you probably do have a lot of information about what's going to happen in the future of the company. And if you're a 10% owner of a company, then you also would probably have a lot of information. So the SEC kind of says, look, these people, we're just going to go ahead and tell them that we're going to watch them, or we're going to monitor them. And they've put some rules around that. So if you're an officer or a director or a 10% owner of a company, you have to file all of the trades that you make in your own company. You have to report them all to the SEC, and those reports are publicly available to everybody, to you and to me. And those reports are filed in what's called Forms 3, 4, and 5. And so let's talk about that now. And so just because an insider, an officer, makes a trade in his company doesn't mean it's necessarily an illegal insider trade. And I think it's important to understand. The first definition that we talked about was illegal insider trades. It's when somebody makes a trade based on material, non-public information. And the second definition of insider is a trade made by a director, an officer, or a 10% owner. Now, if a director or officer or 10% owner wants to sell shares in their company, they should be allowed to do that as long as it's not based on material, non-public information. And that's kind of what the SEC is trying to figure out whenever they track all these forms, all these trades via the Form 4s. And that's kind of what we're trying to figure out as well. So let's take a look at the, I'm going to pick on AMD here. But you'll see that the share price is doing great, and it doesn't look like anybody's making trades on material, non-public information. But I'm going to show you what I look for whenever I look at these trades. So here's the AMD page, insider page on Fintel, and there's some header information here which is interesting, and then there's a chart here which is a little bit weird because there was a big purchase a long time ago, which kind of washes out all the rest of the chart. But let's ignore that for the time being. here's the insider roster. So you have a list of all of the insiders that have filed forms with the SEC and the shares owned and so forth. You can drill down into these by clicking on this button, on this link button here. And then if you go further down, you can see kind of the history of the transaction history. Okay, so this is as of I think today is the 23rd or so. We highlight this in red if it's a sale, just so you can kind of get a better sense. If it's obviously it's a purchase, it's a green. Most insiders, most officers, I should say, get paid a significant portion of their salary or their income or their compensation from a company is in shares. And so it is normal for officers and directors to want to sell shares in order to increase their income. So the question is, it's also, you know, normal for them to want to sell if they know that there's bad news. So that's what we're trying to figure out. Now, because a lot of people look at insider sales as a signal of the kind of the future prospects of the company, there became this kind of thing called the 10b5-1 rule or plan, which basically is a situation where an officer can say, or an insider can say, look, I want to sell shares of the company because I need to make income, but I don't want to create a false impression that I believe the company is doing poorly. So I'm going to create a plan, and I'm going to write it down, and I'm going to file it somewhere. And that plan is going to be basically an automatic sale of securities that's going to take place on an ongoing basis, whether or not the company's doing well or doing poorly or so forth. And that's what this column means. So the idea is that if Eugene here has filed a 10b5 plan and he makes sales of AMD stocks on a regular basis, and so he's signaling to us that he made this decision a long time ago, and so therefore we should not read too much into it. And that's great. That's a lot of good information for us. But what about the ones that don't have a 10b5 plan, like Darla Smith? Like, what does that mean? Well, let's dig into this a little bit more here in a second. But first of all, I want to show you what is a 10b. What does a form for it look like? So I'm going to click on the form here. I'm going to open it up, and we go to the SEC page, and we look at this form here. There's a lot of information in here, and I'm going to try to unpack it. We can see her name here. We can see the issuer's AMD and the trading symbol. She's the chief accounting officer. But here's the information that's interesting. Table 1 is the non-derivative securities acquired, disposed of, or beneficially owned. And this is basically shares of the underlying stock. So it would be shares of common stock, AMD, the stock that you and I are most familiar with. You can see here that the transaction date was on the 15th and the 18th, code M and code S. M, I can't remember exactly what it is off the top of my head, but S is a sale. If you go back over here, M is a exercise. So that means that she exercised some stock options and then she sold some stock options. This is she acquired, so she exercised stock options that gave her 1,600 shares of AMD, which would have been worth about so that would have raised her total number of shares owned up to 20,779. And then 3 days later, she sold those shares. She sold 831 of them for $38.63, making her total share count down to 19,948. That's kind of what this means here. This table 2 is the derivative securities acquired, disposed, or beneficially owned. So this is basically the derivatives are restricted stock units or what we know as options. Okay, and you can see here this is restricted stock units. You can see here this is the kind of contra line to this line here. She disposed of 1666 of the options or the restricted stock units in order to get these stock here. Okay, so that's kind of an overview of this. Let's come back here to this page and talk some more about what we have on Fintel to help you understand if somebody's doing a good job at trading and perhaps cheating or so forth. So Rory Reid is an officer of AMD, President, CEO, Director. And I've clicked on Rory Reid's link here, and I can see some detail about Rory Reid. Rory Reid is officer or chief operating executive of Dell, or was perhaps, and also was or is the president CEO of AMD. Probably was, because I think Lisa Su is the president CEO now of AMD. You can see at AMD, Rory purchased some shares back in January of 2013, and it went way up. So that's interesting to us, okay? Although it took almost 3 years before it really went up, so it's really kind of hard to tie some kind of hunch or inside knowledge to this particular transaction. You can see this is one transaction. Down here is the date of the transaction, and you can see it simply went up over the course of many years. Rory Reid does not have any sale transactions. And just to be clear, these charts do not include 10b5 transactions. So we're not including any transaction that was marked as an automatic purchase or sale. The idea here is that we want to only look at transactions, insider transactions that were kind of like off the cuff or unplanned, okay, because we believe that there's more information there. Let's take a look at Rory Reid's Dell transactions. So Rory Reid does not have any purchase transactions in Dell, so that's nothing to look at. But look at the sale transactions. It's kind of interesting here. 2019, July 12th, July 15th, July 17th, July 18th, Rory made 1, 2, 3, 4 sale transactions. 1, 2, 3, 4. We can see them all here in a row. And shortly thereafter, it looks like within perhaps a couple of weeks, the share price of Dell plummeted significantly for a while, and then recovered a little bit, but continued kind of to go way down. And then you can see again around the end of the year in 2019, there were a few more sale transactions here. That's this line here and this line here, and it looks like the share prices continue to decline. So it's kind of peculiar, right? It seems like, there's no way that we can say that Rory Reid is trading on material non-public information, but it seems like this person made some pretty good timed sales, okay? And just to be clear, there's actually a lot of academic evidence, a lot of academic research that shows that even though insiders, i.e. directors and officers and 10% owners, are not allowed to trade on material non-public information, they tend to do a really good job of timing their own trades in their own companies. And that means that they tend to generate, if you were to be able to match those trades, you would be able to generate excess returns. This is one of the, this is a well-known, it's called an insider trading anomaly. Insiders beat the market in their own shares. And so here's an example of a scenario where we can kind of see where an insider has made some trades and it seems like it has worked out. It's prevented them from losing perhaps more money than they could have if they had held on to those shares. They seem like good timed shares. Let's look at Mark Papermaster. Mark Papermaster was only ever listed as an insider of one security of AMD, and you can see here that he has no purchase transactions, and he has a bunch of sale transactions, and almost all of those sale transactions resulted in the share price going up significantly in the time frame following those sale transactions. And that's probably because AMD has continued to just go up over the years. And so there's really no evidence to suggest that Mark was making, was trying to trade on insider information. In fact, he would have been better off to hold on to those trades, onto those shares. He would ultimately ended up with more wealth had he not eliminated those shares. So let's take a look at Lisa Su. Again, the same scenario as Mark. She's also an insider at Analog Devices. She's a director there. No purchase transactions at Analog Devices, but she has one sale transaction. That sale transaction, the share price dropped about 10% in the weeks following, but subsequently, in the following years, has continued to climb significantly, up to 40%, almost 50% 3 years later. The AMD performance is similar. One purchase transaction back in 2013, I don't know how much this was for, 2012, and the share price has climbed 450% since then. What a great trade, huh? Now, if she goes out and she makes another purchase transaction, would you be inclined to follow her? Maybe. But one trade is hard to kind of build a pattern around. She's made a number of sale transactions, but like with Marks, all of those trades have pretty much gone up in the weeks and years following. So it's hard to draw any conclusions about what she's doing here. And then we have another insider, James Anderson here, who is an insider, listed as an insider at Lattice Semiconductor and AMD. Now with AMD, as with Mark and Lisa, he has made a number of sale transactions, and the share price has continued to go up in the weeks and months and years following those transactions. So, hard to say that anybody's selling to prevent losses here. But look at these two Lattice Semiconductor purchases that he made. He obviously believes in the company, and he's made some really great decisions here. He made two purchases, and the first one is up 160%, and the second one is up 60% in the years following. So, two good trades by James Anderson and Lattice Semiconductor. If he goes out and he makes a third one, would you follow it? Would you go in and buy in after him? Maybe, maybe not. But that's something to think about. So that concludes my presentation. I talked to you a little bit about what an insider trade is. It's any trade made by anybody based on material non-public information. I talked to you about the other definition of an insider, which is an officer or director or 10% owner of a company. I talked to you about how the SEC likes to track the second version of insiders' trades so that they can determine if the company is, if the insider is making decisions or making trades based on material non-public information. And then I showed you some charts here that allow you to kind of track the performance of insiders so that you can see for yourself if they're doing, if they're trading on their own behalf. I hope you like this tutorial. Please, if you do like it, click like in the YouTube UI, and then follow this channel because we have a lot more tutorials to come.